Hello, welcome to today's IEP Live Learn Lunch. We're really excited to be joined by Phil from Entitled To today, who's going to take us through today's session. We will be recording today's session and sharing it via our YouTube channel. And we also want today's session to be really interactive. So please, if you haven't already done so, say hello to us via the chat facility, and do make sure you are sharing your thoughts and comments and questions via the chat throughout today's session. Thanks. Over to you, Phil.
Thank you very much, Helen. I hope your puppy is going to be obedient, because what I might need you to do is to read out questions to me when they come in, because I'm incapable of doing the two things at once. So that's
fine. He looks like he's going to sleep, and I've taken the squeaky toy off him. So fingers crossed. I'll mute and unmute as you need me, Phil.
Okay. But basically, if anyone's got any questions, if you put them in the chat, and then if Helen asks me, and if we've got loads of questions and spend all the time on questions, that's completely fine. So yeah, hopefully I'll cover the basics in a presentation, and then I'll give a demonstration of how our Better Off calculator works. But like I said, I'm expecting there to be questions. I was on the webinar this time last week, and there are a number of questions there, and I suspect there'll be more this time. So I'll just take you through the demonstration, but if there is a question that you think is relevant, do interrupt her. Okay, so Entitled To, we've been around 20 years, and we supply about 200 organisations, the majority of whom are actually local authorities or housing associations, and we have a whole bunch of different products, but the one which is relevant to this area is our Better Off calculator. So that's background on Entitled To. I'll now do a bit of background on the COVID support schemes that are now ending, and then a bit of background on universal credit and what it is, a bit more on self-employed UC claimants. I may cut that a bit short, because I'm not sure that at this point in Restart you're going to get a lot of self-employed people, and in particular what I'm going to tell you about the way universal credit affects self-employed people will probably put you off that avenue of employment support. Okay, and then I'll do a demonstration. Okay, so we have a poll. I can't operate a poll. Helen, can you do this bit? This is to give me some background on your knowledge of the benefit system. So, oh, you can see that everyone's more used to polls than I am. So there we go. If your dog is allowing you, at what point would you normally stop? Is that enough?
We'll give them a few more seconds. So I can see that 40 of the 56 people the poll went to have answered so far. So we've had 81% of people have participated. We'll give it maybe another 10 seconds. But what I'm seeing is we've got about 20% say they know quite a lot. About 80% of us are saying a little bit still learning. Oh, that's dropped to about 75, and 4% have said nothing at all. So the good news for you, Phil, is you're going to teach people things today. We're going to have lots of people who've learned things. Nobody thinks they know everything there is to know.
And indeed, what we're trying to do in our tool is, I suppose, to take away some of the bits which are just about manual calculation. And today is about sort of background in terms of, for instance, I'll talk about people who are on what are called legacy benefits, which are, tax credits and income support and job seekers allowance. I don't think they're now, that I'm expecting in Restart for that to be a minority of participants, but they're really quite a different sort of things going on for them. But I'll come on to that. That's really useful to know. Has it gone? How do you make the thing in the middle go away? Is that a you thing? Or can I just carry on with my slides and it will all work?
You should be able to click it to close it, and it should disappear for you now, Phil.
Oh, got it. Thank you so much. Right. Okay, so I will just give you some background of where we are in terms of the COVID-19 support interventions, which is pretty much at the end of them. This thing called the minimum income floor that I'll come on to that affects self-employed UC claimants, that is back in action from the beginning of August. The final self-employment income support scheme payment is about to become due, as is the end of the job retention scheme. So they both end at the end of this month, and as has been in the news a great deal, the £20 uplift to universal credit is also ending. So for people in employment, those on furlough, and that's still over 1 million people, now might be the time when we get to see how much of those million people are going to be retained, or whether that was just deferred unemployment. And obviously they'll be going on to a lower level of universal credit, but also the 6 million existing claimants of universal credit will be losing £20 a week. So there's an effect of reducing benefits. It doesn't make the gap between in work and out of work income any different. It just means that you're poorer out of work, and equivalently, if you were getting help in work from universal credit, it will be £20 less. So the getting rid of the £20 uplift is what's going to be felt most keenly by your clients now. But of course, in the background is how many of those million who are still on furlough are then going to flow on to universal credit. It's worth saying at the same time, there's also a record amount of vacancies, over 1 million vacancies. So the state of the labour market is very difficult to judge, but it's clearly not at the worst end of expectations in terms of employment levels. It's better than was originally forecast when the restart scheme was invented. Okay, so there's a rather old graph showing the impact of furlough and redundancies, basically saying that when furlough was high, redundancies went down. We don't know what's going to happen with the end of furlough, whether those 1 million people become 1 million redundancies. This is probably the more important slide about the impact of COVID on the labour market, is the unevenness of the impact in terms of age. So young people are more affected, and in terms of ethnicity, where BME groups are much more badly affected, so almost double the rate of unemployment. And similarly among disabled people. And it's really it's not the rate of unemployment this is showing the change in unemployment during the pandemic. So for non-white ethnic groups, the increase was 3.7% more, 9.5% rather than 5.8%. Okay, so in terms of the impact by age, it's showing the 18 to 24s being particularly badly affected, but also people who are 65 plus. So that might be that they're just withdrawing from the labour market. Okay. I'm going to move on to universal credit. I think the background I've just shown is really about the nature of the demographic flowing onto universal credit and what's likely to happen to caseloads. And essentially, caseloads are not going to be expanding in the way that seemed possible earlier on in the pandemic. Okay, so you're probably familiar that universal credit joins together some of the what are called legacy benefits. So those are the 3 benefits that you got when out of support under the old system, out of work, which were income support, job seekers allowance, and employment and support allowance. And then tax credits were merged in. And probably most importantly, support for housing through housing benefit was merged in. Okay, but that is not the entirety of the benefit system. So we also show entitlement to something called council tax support, which can provide up to 100% help with council tax bills. So in the old system, the legacy system, housing benefit and council tax benefit were administered together. But when universal credit was invented, council tax benefit got changed into something called council tax reduction or council tax support, and that's now administered separately by local authorities. You'll see that on the results page. There are still about 3 million households on these existing legacy benefits, and over the next 3 years, though that number keeps going backwards, the government are going to be migrating them onto universal credit. I'll say a little bit more about that in a moment. For people who are on universal credit already, the thing to remember is that there's a component which is for them, an individual allowance, and then there are components to reflect their needs. So that's their needs in terms of children, their needs in terms of housing costs, i.e. rent, and their needs in terms of childcare if they have it, and additional amounts for disabilities. So the reason why some people get large amounts of universal credit is because they've got large amounts of needs. So they might have 2, 3 children, come on to a limit on 2 children, or they might have a disability, or they might, of course, have high rent. And it's because universal credit includes help with rent that makes it really substantially different from the previous system. Okay, of course, once you've worked out the needs, what you're doing is subtracting the income that they have, but there's an allowance if some of it comes from earnings. Okay, so back to this idea about different legacy benefits. So at the moment, the people on universal credit are new claims, like the people during the pandemic, and then people who were on the old benefits, and then something happened, like in many cases, if they were claiming housing benefit and moved to a new local authority area, the rule is that you cannot make a new claim for housing benefit, so you moved on to universal credit. So groups 1 and 2 are the people who are currently on universal credit. Group 3 are those 3 million people who will be moved over the next 3 years from their existing legacy benefit onto universal credit. So if someone is on a legacy benefit, they've kind of got different rules applying. If they have certain changes, they may have to claim a move onto universal credit. So we have got some guidance on board the website which will tell you about this in terms of the amount that they get under universal credit, but more importantly these triggers, because the main thing is different things. If you have a child and you're claiming child tax credit, you can still claim working tax credit, is the important thing to know. But if you don't already have child tax credit, you can't make a new claim for working tax credit. But other changes in circumstances are covered on our site. Okay, so that's one important piece of background, which is the rest of this presentation is about universal credit claimants. There's still a whole lot, 3 million households who are on legacy benefits. So when you come across someone who's on a legacy benefit, there's a whole bunch of different things to think about. And I've covered that already, that the £20 a week boost is ending, and we have a payment calendar which shows that. But I just want to go on to this slide about the work allowance, because this came up as a question last week. So universal credit works out all your needs. That's what the calculator does. And then it subtracts an amount because of your income. But if your income is from earnings, and it has to be from earnings, you get an allowance if you have children or you have a disability. In universal credit language, it's having limited capability for work. So the amount you get then varies depending on whether you get whether you're a renter, and if you rent, the first 293 a month is in part of the allowance. But if you don't rent, don't claim help with housing costs, then it's 505 a month that you can earn without anything being deducted. For everyone else, there's no work allowance, and after that work allowance, the deduction rate is 63%. So there was on the news this week, the Secretary of State for Work and Pensions talked about universal credit claimants being able to make £20 extra a week just through working a couple of extra hours, but of course she forgot about the taper. So once people are above the work allowance, they're going to lose 63p in every pound. And they might also have to pay some tax and national insurance. Fortunately, that's exactly what our calculator does, is work out all these numbers. So when we give a better off amount, which is what I'll show you, we're taking into account the work allowance and whether the individual qualifies for it. So you can look at different scenarios in the calculator for different earnings. And this may be a step too far because it's just an extra little thing which occurs because of Universal Credit's system for assessing periods. If you're paid monthly, Universal Credit will adjust monthly in line with your earnings. So it actually works 1 month in arrears, but if your earnings go up 1 month, your Universal Credit the next month will go down. If your earnings go down, the next month your Universal Credit go up. The strange thing about people who are paid weekly is that because of the way this assessment credit period works, in some months you're going to have 5 wage payments, and in some months you're going to have 4. So we have a calendar which works that out. The next slide just states that rather more clearly. So in the case I've illustrated here, this is someone who claimed Universal Credit on the 8th of a month. So that might have been the 8th of March 2020. And that means that their assessment period will always run from their claim date to the next month minus a day. Okay, and when you become on, if you're self-employed, obviously that's really important for working out your profit, but for earners, it's just important to know that the way Universal Credit measures your earnings is over an assessment period. It doesn't mean, so a month doesn't mean January, February, March, April. It means your individual assessment period. Right, I've got to the end of that section there, but I'll just pause, Helen, and see if there's any questions from anyone.
Yes, there is. Simon asks, work allowance, how much can someone earn before Universal Credit benefits are affected? Yeah,
and so the answer is, so look in the first column, are they responsible for a child, or are they disabled? Is what limited capability works. So if they meet one of those criteria, they will get an allowance. The next question is, do they pay rent? If they pay rent, it's going to be 293 a month. If they don't pay rent, it's going to be 515. Okay. If you don't have a kid or you don't have a disability, and that's someone in the household, then actually, yeah, I believe it's someone in the household. There is no work allowance. It's 63. The taper rate is 63% from the first pound.
Okay, thank you for that. It's always tricky, isn't it, to remember all of these rules? That's why everyone's here today. And we've had another question. What does it mean for someone to get help with rent?
So when you make a claim for Universal Credit, it asks you whether you have paid housing costs. So I mean, I'm a private tenant, so I've got a contract, and there's a set of rules for private tenancies which limits the amount of rent. But in my claim, I'm getting help with my rent. And equally for social housing, there's different rules about how much you can claim, but it's included within your Universal Credit. So if you're used to the old benefit system, that's the bit that would have been met by housing benefit. But in Universal Credit, it's all part of the one payment. So if you are either renting from a social landlord, like a local authority or a housing association, or you're renting privately, you're paying rent, that's met by Universal Credit. And therefore, if you're paying rent and have a child or a disability, it's the lower amount you're going to get.
Okay, thank you. And that's it for questions, but Michael has asked, can we get the slides emailed out? We don't send the slides out, Michael, but what we do is we do share the recording, so you will be able to access all of this information from Phil. I've had another comment from Simon. Read the allowance then. Anything earned after the allowance, then universal credit is deducted against earnings at 63% in each pound after the allowance. Is this correct?
Yep, that's spot on.
And Sam says, what is...
It's their net earnings, I should add there. Okay,
so net, so not gross.
Not looking at the gross. So if they've already had, you know, tax and national insurance taken off, it's that net amount that the 63 is applied.
Okay, brilliant. Sam says, what if you have a mortgage and disabled child, gave up work to care for them?
Right, that might be getting into when I have to ask you to repeat the question, that should probably wave a flag to be you know, I can't. We're going to go too far down one route if I do that, if that's okay. So
so it's maybe something we could they could look at with the calculator themselves, couldn't they?
I think so. It's just on. I'll get hopelessly sidetracked onto this example.
Yeah. Welcome to my world, Phil. I get asked all these questions all the time live, and it can be challenging. So Sam, we will come back to that, and hopefully the calculator can help you with that.
Yeah, no, I'm aware that it's 12:25, and I want to get through these slides. But yeah.
Okay, no worries.
So yeah, there's a whole big. I need to do the demonstration at the SGC, so I'll just zip on at that. With self-employment, historically under the legacy system and tax credits, the way tax credits worked with self-employed people was it was essentially a self-declaration system. I spend X hours on my employment, and you submitted your income every year through the standard tax system. But universal credit has got rid of all of that and introduced this idea of a minimum income floor. And what that says is, if you're self-employed, we will expect you to earn a minimum amount, which is equivalent to the minimum wage times X number of hours. And that number of hours is set in the individual's claimant commitment. And if you haven't got reasons for it to be different, that's 35 hours. I think actually this got mentioned for quite a lot last week in that presentation about how it is possible to talk to work coaches about those number of hours. But the key idea to get over is that you will be expected, if you're self-employed and over 23, so a higher minimum wage, and these 35 hours, to be earning it's the number there in the middle, the 122,750 this year. So 1,225 pounds a month minimum. And if you don't earn that, if you earn less than that, universal credit will assume that you do earn that. So your universal credit will go down. So it means that relative to being an employee, you kind of get penalized for being self-employed. The key thing to have in your head is you should be making at least the minimum wage times this number of hours, and it gives the number of 1,227 for this particular individual. And yeah, if they earn less than that, if their net profit is less than that, that's going to effectively make it more worthwhile to be earning the equivalent as an employee. Okay, there are the reason for doing that essentially is because the government felt that people were doing jobs which suited their there's a term for them, I think they're called lifestyle businesses was the term that was used. And it was felt that on principle self-employment should be paying you the minimum wage. So that was the reason it was introduced. But it is expected to reduce the number of self-employed people in universal credit. However, there's a grace period during the first 12 months. So if you're new to self-employment, it doesn't kick in straight away. And then obviously because of the pandemic, there's essentially been an extra grace period for the period. So the entire period of the pandemic, which for these purposes are the 14th of March 2020 to the 31st July 2021, is kind of ignored, is taken out of the equation. It's quite complicated stuff. It gets worse when you look at their reporting. It's worth having a really good think before sending people down the route of self-employment if they're on universal credit, and of course if they've got high needs. So that means children and or rent, because the likelihood is that they're going to be getting in-work support with universal credit as well as out-of-work support. The calculator will of course show you if they qualify for in-work support, but it stands to reason that the more needs you have, the more universal credit you're going to get, the more likely you are to qualify for universal credit in work. Right, we also have a calculator at the end of for self-employed people, which shows you the minimum income floor, but you will have to use the calculator yourself to see that, because that's not the subject of my presentation, which I will do in a moment after pausing for any further questions, Helen. Oh, no, and we're going to have a poll. I've forgotten about that. We could do questions and then poll, or poll and then questions, whatever suits you, Helen.
Would you like me to launch the poll, Phil?
Go on then, please. So, yeah, it's a poll about, have you used our Better Off calculator? Were there any other questions, Helen?
Right, there is a question come in. Well, I work in self-employment. This is from Simon. How do claimants report earnings other than annual assessment? Does it now require monthly earnings reporting? It
does. That's exactly correct. Yeah. So I've got a longer self-employment presentation which talks all about this. Yeah, there's every month you've got to fill in a form, and the problem is that from the individual's point of view is, as well as reporting monthly to universal credit, they also need to report annually to do their tax return to HMRC. And in fact, the rules are slightly different between the two. So if you wanted to kind of optimize your universal credit and minimize your tax, you'd have to know an awful lot of rules. The most important thing that they need to know when they're looking at their income is that it's their income in their assessment period that they need to look at. And so it's the monthly income that they get during that assessment period, which is the date they started claiming to the next month minus one. Right. I hope that answered that question. And
good. So we're going to have to book you for another session, because already I've had requests for that self-employment presentation that you've said you do. So I'll pin him down, everyone, at the end of this, and we'll see if we can get him back. Another question along the same, are they expected to report earnings via the government gateway online each month?
I believe the reporting of earnings is via the UC Journal, but I'm not absolutely certain of that. Okay. That's my belief.
Okay, and we've had another comment from Chantel to Sam. From what I know, depending on how much the disabled person is receiving, you can claim carer's allowance for the disabled person and you won't be told to look for work. For the mortgage, I have heard from my customers that they have had their mortgage paid, but I'm not 100% sure how this works. Hope it helps.
I'm
there you go.
I can't comment on that.
That's fine. That's fine.
I'm sure that I'm terribly sorry, but I can tell at a glance that that's going to require deep thought.
Okay, no worries. So we've had, everyone has responded to the poll now. So the poll was, have you used Entitled To's Better Off in Work panel before? And we had 37% said yes on the public site. 8% said yes, and they're already a client of Entitled To, and 56% have said no, they've never used it before.
Lovely, that's great. Okay, I need to go through it reasonably slowly then, is what that's told me, so that's grand. Okay. All right, so I will get rid of the poll and I will click on a link, and hopefully, if I've clicked on it, that'll be right. This screen showing our Better Off calculator will have come up saying entitled to top left and Better Off calculator at the top. Can you see that, Hannah?
Yes, we can see it.
Terrific. Good. Okay, so this is a free trial calculator that we give out to people who want to see the extra things that we add on for organizations. So just to explain that the public site that we provide is essentially intended for individuals. We've always provided it and we kind of always will. But for clients, there's kind of 2 or 3 things going on. The first one, which I'll show you in a moment, is really that you've got the ability to add a reference ID, and we can also integrate with CRM systems. And we are trying to have a system on our side where we keep everything anonymous, but if you have a unique reference ID and we can make it more secure in various ways, it means that you can then link the calculation to a real person and add it to your files in a convenient way and be able to return to it. So that's the main thing that we're doing when we're providing it to an organization. There's also some extra advisor features, which I'll show. And the final thing we do is we make it look nice and kind of put it in the right colors for the website. So kind of anyone who's providing advice, it's worth having the professional version just for the extra features, but particularly for the reference ID. If you're an organization of more than 3 or 4 people, I'd say that's doubly so, because it gives you ability to share appropriately between each other. Okay, so what you'll see on the free trial site, and I'll leave it on there, is these hints and tips as you go through. You'll notice that I'm signed in, okay, and we make people sign into this site so they can see these extra features. Okay, so there's that reference ID field that I mentioned. Okay, so I'm just going to mention some old nonsense, but of course you would be entering the reference ID for your client from your system. It is important that you don't enter personally identifying information there. So we say that on there. Okay, and I will do just the simplest possible calculation because I really just want to get to the Better Off panel on the results page. So I'm going to say that this person is a council house tenant, and I will enter my postcode and go through next. Okay, so because I'm really trying to get to the results page, I'm going to say that I don't have any children, and I'm going to leave all the other defaults as they are. You'll see that we've got these information buttons here and this text. So under how many children, it advises you essentially that by that we mean, are you receiving child benefit for them? But obviously with shared custody and other arrangements for children, we cover those a little bit in the text here, but we also have the help pages which go into more detail. Yeah, so 16 to 19-year-olds is the other big issue there. So the idea is that you go through these questions, and just as I said at the beginning, what we're doing is we're trying to first of all establish their needs and then establish their income, and then actually we add on their housing needs, their rent, which is a hangover from the way we did it with housing benefit. So I'm going to say that they're out of work, but they're not disabled. And I'm going to say that they receive universal credit at the moment. And then there's that guide to the assessment period there. So I'm going to say that they claimed it at the start of the pandemic on the 20th of March 2020. And I'm going to say that they haven't got any other income. And I'm going to say that their rent is £150 a week. Which is actually unlikely to be the case in Lambeth, but I could look up the address from here, okay, or you can just select the council tax amount. We don't store the address, by the way, I should add. And what it's doing is it's saying you live in Lambeth, but you get a 25% discount if you're single. So your council tax liability is about £1,200 a year. So we're also going to work out, as well as help through universal credit, we're also going to work out help through council tax support. So as you can see, this person gets a universal credit of £224 a week. So that is the £150 housing cost plus £75 a week of help, because we're now on to the after the £20 increase. So we're back down to the old rates. And they also get help with council tax of £18.31 a week. On our main calculator, we provide more room for that calculation, and we can set up your calculators to do that. But really, that's because on our main calculator, we're trying to communicate to people about what they're entitled to. We're trying to maximize their income. Whereas when you're in the employment support sector, we think what you're really doing is using this as a baseline. It might be that they've got a sanction or they've got a deduction or something which will make a difference from the amount that we show. But the key idea is that when we do this better off calculation, we're comparing like with like. So we're saying for the result that you are £243 income in work, out of work, what would be the case if you went into work? How would your benefits be affected? Because as I said, for most people who have got other needs, in particular rent, but also children, there's going to be assistance available in work. So you won't lose all your benefits. And that's the key misconception, the idea that I'm in work, I can't claim benefits. The majority of universal credit claimants are in work. Okay. This is the better off panel, which you might have seen on the public website, or a third of you have, but the difference is here, again, I can enter a particular job. Okay, so this might be a job, I'm going to say at Marks and Spencer. And I'm going to say that it's on the minimum wage for this individual, and it defaults to 30 hours. I'm actually going to make it for 40 hours. I wonder if they'll still qualify. I'm not absolutely sure. So I'll click on calculate. I think they'll still get some residual support in work. I doubt they'll get any help with council tax. So they do. They still get £30 a week of help, £27 a week of help from a universal credit when they're in work. So the situation is that they in work will get, on those 40 hours at the minimum wage, £356. But they're going to pay some tax and national insurance on that, which will reduce their net take-home pay to £312. In this case, because I didn't have children and I'm not disabled, I'm going to get that £312 taken into account. And that's going to mean that I'm going to lose universal credit of £197. I'm also going to lose that help with council tax support. But even taking that into account and including the £27 top up for universal credit, I will be £97 a week better off in work. Or if I want to show it monthly, £422 a month better off in work. Okay, so when you've generated that, you can download it as a PDF, and you can also email that to your clients. Okay, so you're doing a specific calculation on a specific job. You're saying that this is your current benefit income, and in identical circumstances but with earnings and taking into account the taper and everything, you are £422 a month better off. Okay, so the question now is, can I switch back? I'm gonna, while I work out how to work the technology, and noting that I've nearly got to 1:45, I'll pause and see if there's any questions.
Okay, so we do have some comments in. Dahlia has said it would be helpful to see a calculation where the rent is above the LHL.
LHA, yeah. Okay, all right, I'll do that in a mo, if I can work technology. Are there any other ones?
Okay, so Dahlia asks, does the result take into account existing debts?
No, so I think I'm trying to say that it's just, if you think about the first calculation that we're doing, we're trying to say if you maximize your benefits and, you know, put into side stuff that they're taking out, if it was just like a clean go, this is what you'd get. And then we're just going to take exactly those details and pretend you're in work. And the first question is, are you still going to get help in work? In that previous example, yes, you are, £27 a week. And then what does that mean for the comparison of your income, taking into account tax and that? It's, the debts will typically still be debts when they're in work, and they may have to pay them off faster, okay? But that's not something that we're doing, because we do have a separate product that does this, but it's impossible for me to give a demonstration of it now, but I'll happily talk to you about it. But this calculator is looking at your income. It's not looking at your budget, which is including expenditure on things like debt. Okay, so we do have a product that does that, but because it's doing expenditure as well as income, it takes a lot longer. And you've got to ask people more intrusive questions like, what do you spend your money on? So we do provide products like that, but typically we provide that to services who are spending a lot of time on this with individuals. So yeah, this is about income out of work against income in work. If you want to get into budget out of work against budget in work, we have a tool that can help. But even if you're doing it without a tool, it's just a different question. So yeah, the thing that we're really focusing on is we're comparing apples with apples, and our apples are about, this is your income given what you told us here now against in work. I hope that answers that, Helen.
Okay, brilliant, thank you. Simon said, can this be used for self-employed people?
Yep, it can be used for self-employed people. And when you go through it for a self-employed person, you see this minimum income floor panel that I've mentioned. So yeah, you just need to select your self-employed.
Okay, brilliant. So Dahlia says, thank you for answering those questions.
Pleasure.
Okay, so that's, yeah.
Yeah, so I'll just try and do another illustrating the LHA point. Okay, so I'm just going to do exactly the same as I did now, because all I'm just trying to do is go through with the same details, because I just want to focus on this LHA point. So all I've done that is different is that I've made them a tenant in the private sector. So I think I said they were losing their job, something like that, though it doesn't affect this calculation. So when I get on to the housing cost page, what I need to do is I need to give them an amount which is more than their local housing allowance. So if you can see at the top, it's got some guidance about this. Most people enter it. So you can go and look on our help page and go off and see how these all work. So there are things called broad rental market areas. Okay, and we do sort of supply links off, but basically we read them all into the calculator. I'm going to have the same problem here as I had. There we go, I can do it. Okay, so I need to guess what the local housing allowance is for someone in Lambeth, which will be something like inner London. I think if I put in maybe 300, I will be over it, I would have thought. So, and I'm assuming that I don't qualify for an extra bedroom. Again, there's a help page which tells you what an extra bedroom is. And I will just select that on band D again, because I explained that last time. Okay, so what it's doing with this local housing allowance system, okay, is it's capping the amount of rent. And do you see that I've put this flag has come up now? So when there's extra benefits information to show, we have this welfare reform flags. So they only appear when they're relevant. So in this case, it said your rent is more than the maximum benefit you are allowed. Okay, so this person living in Lambeth in SW4 6AN, because they're over 35, they qualify for the 1-bedroom LHA rate, which is shown here, but their current rent amount is 300. So they're having to meet the excess, which is £35.34 out of their the personal element of their universal credit. So that private sector system, this LHA system, when the rule is broken, it triggers this flag, and then you can either just ignore it and just leave it up like this. So you just read the headline, that's fine. But if you want to know more, you can drill down and see all the information. In terms of the better off calculation, so I just going to do one thing which I didn't illustrate last time. So I will do a M and S one. Oh, I haven't spelled that. Marks. And I will make it the same as before. But obviously, because this person has got higher needs, higher rent, they're going to get much more universal credit when they're in work. So yeah, so they're getting £142 of universal credit when they're in work. Oh, sorry, this is a complication. This person is benefit capped. So as well as the LHA doesn't make a difference, but this case I've created is now benefit capped. When you earn over a threshold, and the threshold is around 16 hours, but not exactly 16 hours, you're no longer affected by the benefit cap. So whenever you see this welfare reform flag affected by the benefit cap, you're likely to get a higher amount. So when you're dealing with in-work tenants moving from unemployment into work, you often find better off amounts of, say, £80 a week, £85 a week. With people who are benefit capped, it can be a lot more because the benefit cap is removed when they move into work. So that's why this person is £140 a week better off in this case. I hope I've shown an example with the local housing allowance. I've inadvertently created a more complicated example because it also involves the benefit cap. However, I hope I've shown you that when there is something like that, which is important, that these flags help you to know what's going on. Are there any more questions, Helen? I'm aware that I've already gone on longer than we did last week.
Not at the moment, no.
Okay, I might just do one other thing then, because I keep forgetting to do it, which is to say I've created that job because I'm an advisor. The idea is that you build up a list. Okay, so you might have gone for one job at Marks, but in then the petrol station itself, BP, say, would you like another job? We can't offer you the 40 hours. We can offer you 38 hours, but we're going to pay you £11 an hour. What difference that going to make? So it will do the same better off calculation. It's going to work out the gross earnings and then the net. Okay, and it gives the answer of £156. In this case, it's because their gross earnings have gone higher. And then you can compare the two using this drop down. So it's 156 for BP, and the Marks job was, it's 140 something. Come up again, right? So the idea is that advisors, there it is, the Marks job was 140. So if you are using it as an advisor, you get the extra features that I've just shown, and most importantly, you've got the reference ID so you can come back to the person. Right, that's enough. That's enough of the difference between the advisor version and the panel. It is intended to be self-service. So I'm hoping that you can go to our public website and see it there. But like I said, if you want to see the advisor version, if you get in contact, we'll just give you a login for this this free trial. I've slightly run out of steam, Helen, and I'm aware it's nearly 5:02.
That's fine. We have no other questions at the moment. So if anyone's got any questions at this point, oh, Lizelle has said 0 hours contracts with a question mark. So where do we stand on that?
Okay, so in terms of this, really, when you're doing this, you'd probably just change. So it says a month, okay, and that's something that we need to do to make it clear that by that month we mean the assessment period. But what you do is you just the hours work aren't important, so you can make it null, which doesn't make a difference. The key thing is how much are they going to earn. So if they're going to earn, so I'm trying to think of my person there, it was £11 an hour, 40 hours. So it was something like 2,000 a month, was it? So you'd put in 2,000 a month would be what you think they're going to get for that as a monthly amount, okay? And I think what I might do is, you know what, I'm just going to start again now because I want to build it up as a new one. Okay, so what I might do is say I might have a good month. So that my good month, if I'm on a 0 hours contract, will be where I'm going to earn £2,000 a month. Okay, and I'm going to calculate that because we've left in the hours work and the wage rate because often that's how people think in lots of jobs, but it doesn't make a difference. It's the amount coming in that matters. So a good month where they've got high earnings, £167 a week, they're better off. Okay, and now I'm going to go down, I'll do a new one, and I'm now going to have a bad month. So that just means I'm getting less hours on my zero hours contract. Okay, and I'm going to say that a bad month is going to be 1,200. And basically what you're going to see is that universal credit is going to it's going to make the difference smaller, i.e. it's going to compensate because their wages, so they're in a bad month they're still £120 a week better off. So you might have noticed that going from £1,000, well, go that extra £800 a month if I change it to monthly. I'm going to have to fiddle about with too many figures to do this, aren't I? So we've got the bad month there, they're plus 523. And then if I go to the good month and see how much they're plus, I think it will be about 724. Yeah, so they've gone up about 250 after universal credit has adjusted for the £800 gross earnings increase. So it's going to cushion, universal credit's going to cushion those bad months, basically. But in terms of using it for 0-hour contracts, I think what I've just done is the way you should approach it. Is what's your best guess of what you think they're going to earn in a month? And if you're in doubt, just run some scenarios and see what comes out. Remember, by a month is actually the assessment period. So it's when they get, you've got to compare it against their individual assessment period. Right, it's 3 minutes to 1 now, Helen. Is there any more?
Right, we have had a request to see the notes on the benefits cap.
Oh, right, okay. So if you go down, so it's just saying that they would have got, it's capping them down to that level. Okay, and I haven't showed, we've got these how we worked it out things where you can see what we've done. Okay, but there's another one lower down. So with all these things, I didn't do this before, I should have done it. Yeah, these bits, how we worked it out, they give you all the information that you need. So it's written in kind of benefitese, so you have to be happy with things like standard allowances and applicable amounts and things like that. But it is all there how we've worked it out. But yeah, under the benefit cap panel is it's just meant as a big warning saying, you know, it's reducing the income below what it would otherwise be. Right, that is the reason, that gap, that essentially when they're in work they're not capped, so they are using that 339. So that's why you get that high better off in work figure for this benefit cap case.
Excellent, thank you. I think that's all the questions we've had in. I'm getting lots of messages now saying thank you very much for the informative session. And people have really enjoyed it. I know Wendy has shared some details on the chat around how people can access the site, and we did have an inquiry around how to take up the free trial, and again Wendy has shared that. But if someone's watching the recording and they would like to look at organising a trial, how might they do that, Phil?
Oh, they could probably send me an email, and yeah, you might even get to see my email address. There you go.
There you go, brilliant. Yeah, nice and simple.
There's my phil@entitled2.co.uk.
Excellent, thank you very much. So I think that's all the questions. Thank you very much. That was a really useful and interesting session. It's always nice to see tools used before having a go ourselves. So that's fantastic. So I haven't forgotten. Oh, we've had one last quick question come in. We've just about got time. We've got a minute left. Hi, I work for a training company used by the Job Centre. I am wondering if there is any sanctions to people on UC who arrange to go on courses and do not attend, as this is the main frustration for ourselves.
Oh, right. Sanctions is an area that we really don't cover. Okay, so there's a whole set of rules about sanctions, but not only do I not have time, it's the sanctions rules are just a different area of benefits expertise. We're so the numbers people, I'm afraid.
Yeah, I think we can look at maybe trying to organise a live learn lunch that looks at that in more detail. So thank you for that, Phil.
Not me, though, I'm afraid, Helen. We don't.
That's okay. Well, we're getting you back for the self-employment one. We've got your book. We just don't have the date in yet, Phil. That's all we need. So everyone's saying thank you. Good. For the video, thank you for the session, and thank you for your time, Phil. So I echo that very much. Before everyone disappears to the rest of their days or to their lunches, if they didn't nibble on their lunches while they were listening to that, don't forget, next week we don't have a live learn lunch. It's the first time we've not done it in a long time. I think the only time we've ever skipped before is at Christmas since we started, but there's a very good reason. We have the IEP Digital Technology Conference on next week. So if you haven't already, pop over to the IEP website and have a look for it. You can request free tickets via the link to Eventbrite. We have 5 days of webinars going on. Each day is themed, and there's lots to do. You download an app that supports you with the platform where you can join, and there's lots of things that you can see in there. So we have exhibitors, we have sponsors that you can find out more about, we have the speakers, all of the sessions will be recorded, all of them will be shared. There's also a community area, and lots of us are already on there talking to each other, getting to know each other and asking each other questions and sharing with each other information. So you don't have to attend live to register and make use of it. So if you haven't already, there's my push. Go and do it. Lots is going on over there already. So thank you again to Phil and Wendy and everyone at Entitledto. Thank you to you all for joining us today. And I look forward to seeing you all either at the conference or in 2 weeks' time for our next Live Learn Lunch. Thank you, everyone.